shout out to the VIP. Hope you're all doing well. This is London with Bitcoin Spike and VIP Trader. Hope you're doing well, guys. We're going to go over a few things today. Just wanted to live stream. Got up nice and early before the market. We're going to talk about some details, the patterning that Bitcoin is in. We're going to talk about exposure. We're going to talk about some good stuff, just a huddle. Okay, we have a VIP trade group, and we are not necessarily recruiting. We're happy with our group. We're excited and thrilled if you're already a part of our group. And guys, the idea here is not to solicit affiliations, all that stuff. The idea is to bring the best in terms of TA, the best in terms of trade opportunities. I tell the guys in the back all the time, and you guys know, I say this is a trade op. What does that mean? Trade opportunity. Okay, in terms of what we bring in the back. I want to shout out to Venus. Venus, pleasure to be building with you and trading with you in 2023. We got a nice pop on Bitcoin. Very nice. We were in a bullish pattern. Nice to see that. And we'll talk today a little bit about, guys, some of the bigger trades. Let's talk about some big trades today. What do you do if you miss a big trade? Because it's no fun to just sit and watch other people have big trades, right? So we're going to go over some trades. Let me see if I've got, hopefully this is, okay, so I've got one person. Let me see if I've got, if this is public. I think it's public. I believe it's public. You guys let me know if it's public. If not, it's just streaming to VIP, so that's okay. Let me see, make sure everybody getting this in the back in Slack have gotten the link and confirm this is public. To introduce myself a little bit and just remind guys, I'm former hedge fund owner, private non-SEC, non-financial advice, Duke University, Harvard Business School, all the good stuff. Finance professional for too many years, and we just love the markets. That's what we do. And yeah, no Johnny come latelys. We like big trades. We're comfortable with large positions. That's what we do. That's who we are. So in terms of that, let's talk about Bitcoin, where it's at. Let's go through some of the details. We had this specific difficult pattern. You guys know, just to start off with where Bitcoin has been at and where it is currently now. And if you could shout out in the comment, let me know that at least the guys in the back are here. Shouldn't be that many people, but should be a few. Let me see if I can get back to the comment section here. I don't know how to do that on YouTube. There we go. There we go. Hey, Venus. Good. Yeah, this is like our huddle, guys. It's just, it is what it is. This is kind of like our huddle. And we have this option through Slack, which is where we trade. But yeah, this is just a time for us to get together, talk about the market. I know maybe some questions about what's going on with equities and maybe how it may affect Bitcoin, crypto, etc. The interesting thing today, I did just watch and plugged into Bloomberg. Now, Bloomberg's been incorrect about so much, it's difficult to even give them any credibility whatsoever. You guys know that. It's difficult to give them any credibility. Bottom line, they sit and laugh about not knowing the answer to the financial questions and the market's reaction on a daily basis on Bloomberg. Nearly daily, they're laughing about not having answers at all. That's not what I want to be plugged into full-time, guys. We plug into CNBC a little bit more. But in terms of the, and I bring that up not as just a criticism of Bloomberg, but just to say that on their crypto show today, they had, managing director of Swan Bitcoin, which I know a lot of people use to dollar cost average into Bitcoin. They're relatively well-known players, and I believe stable players. I believe stable players. The impression that I have is that the ETFs. There's a projected timeline for approval within the next, they were saying even aggressively could be 6 to 9 months. That would be aggressive in terms of the approval process. I believe the SEC has a quicker timeline than that to reply somewhat. Okay, so just in terms of an update, if you didn't catch that on Bloomberg, big caveat on Bloomberg, right? But that just hit the wires on Bloomberg, so that was the opinion that was put forth. And I do believe per CNBC recently, as of last week, that there is a quicker turnaround that's being expected in terms of a response or at least notification of some sort of a process flow that will be ongoing with those ETFs. I can dig into that some more, and we can all dig into that some more. I'd rather honestly, I'd rather find it on the SEC near regulations, bylaws, or that level of information transfer. So I just need to dig into that. If you guys already have that information and it's on that level, being with the SEC's website or something along those lines that we can really count on. I don't want to count on the commentators for the EFT or ETF, pardon. ETF is going to be obviously a catalyst in the market. We're looking forward to that. And as we're looking at that, we'll continue to trade. That's the bottom line. So I just wanted to update you guys in terms of Bloomberg. If you missed that, I tried to bring it to the back today. The crypto Bloomberg crypto show was on, so that's they were discussing that, of course, but I didn't get any real solid. It seems like Kathy with ARK Investments. I don't know how she's still in business. That's my personal opinion. I don't know how the lady's still in business, but probably because of Bitcoin and some other investments that she got lucky on. But I'm not very fond of Kathy with ARK Investments. So, but she's expecting something more aggressive and is touting her ETF application in line with BlackRock, et cetera. So those are some issues that are ongoing. While we're waiting, what do? We trade. We're looking for the positive probability in terms of a, and you know, we're going through some different featured development processes in the back just to update you, but we're looking for what we want to put any type of exposure to it all in, and not max exposure. But when we look at a specific expansion like this, you hear me talk a lot about expanding volatility, and what's going to be important is that when we're looking at any kind of exposure, okay, when we're looking at an expanding volatility like this, and it's worth noting that we focus in on this pattern so frequently. You hear me say all the time, well, it's expanding volatility, right? But what do they always say about Bitcoin? It's highly volatile, right? So we need to capture and focus on, and we do focus on, what's the maximum level of expanding volatility in terms of probabilities that we can decipher, hone in on, and target, right, to our advantage. The catch-22, and you guys know this, but the market as a whole is like this, and you'll appreciate it the more that you're involved in the market. The dreams that people have of getting involved in the market, first of all, to distinguish, is the following. Well, let's say I come to the market, I'm a young kid, I've got 10 grand, and I want to turn 10 grand into $1 million bucks. All I got to do, that's the first line of thought. Or maybe I want to turn it into 100,000, 10,000 into 100,000, maybe. But I really want to find that opportunity to make $1 million bucks off $1,000 or, okay, that's where people start in the market, right? The more that you get involved in the market, and we'll go through a few different assets here aside from discussing this, but in the context of expanding volatility, and there's a solution to this. Essentially, there is a solution to this. But as we were to look at expanding volatility in this capacity for Bitcoin, what is the real, as we look at Bitcoin up 1.93%, about 29,750, we realize as we start to trade, it's not the add another 0 or 2 zeros to the entire bank account, right? There are opportunities to do that on a sum of money in a trade, okay, to lock in a 0 or 2 zeros on a position, but rarely, if ever, do we approach an opportunity realistically in the markets as we should be expecting to multiply or add a 0 or 2 zeros to our entire account, right? That is the difference between someone who is sophisticated in the ways of the market in terms of reasonable expectations, someone who's going to last in the market, and someone who's not, okay? And a lot of that is years under people's belts in terms of ability to appreciate the market, okay? Because you can even pick up a Warren Buffett book. You guys know this. You can pick up a Warren Buffett book and you can start reading through about 10 baggers, about something that's a stock that's going to go 10 times your money. And the problem is that speaks to this, you know, the young trader mindset when you're first getting involved in the market. And what associates with that? Time. Typically the trader who also wants to get in and put in, let's say, their whole account or the amount that they have and add a 0 or 2 zeros. You guys know, and you can find that mindset with literal Warren Buffett. You guys know that, right? So with that comes this pressing lack of patience that the person who wants to create the extra 0 or 2 zeros into their account wants to add and multiply 1,000 to 100,000 or 10,000 or 100,000 to 1 million or 10 million, whatever it may be, right? That mindset, it's a quick and easy mindset. You guys know. So it's worth talking about in the macro, and as the typical approach is maybe the market is attracting that, right? Because you have to think about those $10,000 the clients that come in for the brokers, et cetera. They all just somehow fold and just disappear, right? Whether or not it's a lot of accounts, 10,000, 40,000, 50,000. That's how the majority of people start out in the market, right? And I bring that up because the time consideration, along with the level of exposure, right? First of all, neither one of those are working in your favor if you're trying to multiply your account by 10. You're not going to, your whole account is involved, and you want that to accomplish immediately. Whereas, like, if you went the Warren Buffett style, he'll talk about something that went 10 times, but it didn't go 10 times overnight, right? And he doesn't explain that in his original, those intro books you'll read if you like the market. You're not really going to get into, well, that one took 3.5 years to go 10x, right? So as we approach something like volatility, and hope you guys are doing well today, watching Bitcoin break out of the pattern, just bullish 72% probability pattern, 2% to the upside. Not a huge move, but we're glad to catch it. And in line with this, I know as we sit here, as we huddle up and we talk about our trade group, I know you wanted to put more money in here, right? The entire time that you look at this is as you look at a pattern that, well, we're going to hit that level of resistance, but the challenge is to act in line, let's say to conduct oneself in terms of trade account, et cetera, and to appreciate the fact that it's not the hype, it's not the excess excitement, quick and easy fix. That's not going to get you where you want to go either. Usually in terms of TA, if it's exciting like that, guys, it's in terms of that rush mentality. That's for kiddos, and I mean like kiddos, like kids in high school. Yeah, I could handle that really well in high school. You could have too, right? But the more sophisticated you get in the market, you look at a volatility situation, and you look at them. We appreciate the time involved in these, right? And it's as we could talk about a solution for kind of the problem presented here as well. But level of resistance, level of support, expanding volatility, right? We call these bell pattern formations. We like to rock them to the upside. 72% of the time, we're going to breach this level of resistance across the top. And what's the problem with these? You guys know what's the problem? And it's not a problem, guys. I promise you, it's not a problem. Operating along level of support. I did some calculatives last night, and good gosh, if you have an appreciation for, given the fact that you're going to return to structure top, and that's the biggest thing as I look at trading right now, and you guys know this, but as we look at trading, just the expectation to return to a level of resistance. And so we do care about how this is formulated, right? We care whether or not we're looking at a level of expansion that is a bit more flat across the top. This is the pattern, guys. This is the pattern. Yes, we love bull flags. Okay? If we could have more of them, that'd be fantastic, right? But they're just a lot more rare, right? I'd say less frequent in terms of the expanding volatility. And a lot of these we'll find within a bullish dynamic, be it a pennant or a flag, to where we're going to still recognize this pattern. And you guys know it. You guys in the back, you know it. You'll forget it until it rocks and you didn't want to pay attention to it. It rocked to the upside. You're like, okay, I promise. And you'll say, I promise I'm going to focus on this the next 10 days straight, right? And you'll probably get one or two of them when you do that. So we do care about how they're formulated. We've been through that. Okay, as long as this top line is descending, right? As long as the top line is descending, okay, what do we care about? We care about that it's descending and the bottom line is descending, period. That's it. But we also care about, you guys know, we also care about how, let's how heavily slanted it is. We care about how wide open it is, how narrow, and how it's slanted. You guys know that. So, and why would we care about some level of resistance like this across the top? Just huddle up and just listen in, guys. Level of resistance across the top. This is deeper, right? It's steeper. So I care less about this return to top, my profit equation, as we diagnose and try and solve the issue. As we try and solve the issue, well, I want to involve more capital. Dang it, I want to involve more capital, and I want to take advantage of the probability. I almost hate using that word. It's really, if I could use the word certainty, because no one will use it. If I could use the word certainty to get your attention, that we are 72% certain to get to the top level of resistance. Something to jog the mind, to get you to understand that 72% to, let's say, 80 or 85% is different than 51%. big time. So I want to use the word certainty. There is a certainty of 72% to get to that top level of resistance, just to get you to realize that 72% is so much different in the market than a 51% probability, quote unquote. You lose the power of a probability. You guys know this. When you trade these, you know this, you know this, right? The 51%, take it out back and throw it in the alley. I never want to see that again. Just shove it off the cliff. I don't even want to see it. 55% is gone. I don't even want to talk about 55% probability. I really, and you guys know, you get to the point where you can see a 55% just a trash probability, technical probability. So when I use that phraseology, I just want you to know in the context hereof, I'd almost rather just use the word certainty within 72%, a 72% certainty of getting to that line. That's how good these patterns are. If you'll focus on them and that you trade them, you understand what is that 72%. You're certain within 72%. I got to distinguish it somehow, guys. And the ones who trade a lot on this, you know why. Because you're going to get back to this level of resistance. Near certainty, right? You're at 72%, but it's enough to really break the weight of that argument to where you are concerned critically over what? Over your level of exposure in this zone, right? You're concerned about the equation that you have. And I'm going to throw over the Fibonacci, what are we going to call this? The fib wedge. We're going to throw a pitch fan on here, okay? This is just a pitch fan just so you can understand the dynamics in play. But as we were to talk about levels of exposure here and the profit equation, when I say in the back, this is your profit equation, right? This specific dynamic here of let's say a steeply angled, we don't like that profit equation quite as much, okay? We don't like that profit equation quite as much. We like, and I'll tell you this, I don't mind this bottom angle being a bit aggressive to the downside. Why? Because I want a lower entry, right? Yes. So distinguish not only level of resistance and support heading down in this fashion, I don't mind the level of support being angled further down. That's fine. Give me a lower price, lower entries. I may show you guys a spreadsheet. I don't have it up right now. You guys know phenomenally how much of a difference it makes when you have a lower entry. At every range level you operate at, and particularly when you are lower, it matters when you're lower. I know it seems like it not much because, well, we're at 29,000. What's the difference between 29,795 and 28,250? It's lower. You get more bang on your buck at a lower value, okay? So accompanied with a near, I was going to say a flatter top resistance that is still descending. We want this descend. Both of the resistance and support have to be descending, okay? So, and as I lay out a bit of a pitch fan on this, the equation here in it is the following. Is how do we get more capital involved here, right? To here, without over, you guys know this. This is the equation. This is the profit equation that we go through, right? Okay, I've got a 72% probability of getting near certainty, right? I just want to say you're 72% certain of getting to that top line resistance. Trade them. Trade them. Even if you fall out of these, what are you guys? If you fall out to the downside here, ooh, it's time to call London wrong. Really? That's especially when I would like to remind you that there's a 72% certainty of hitting this top line, right? And you'd be like, does it ever quit? And you'll watch it and 2 or 3 days will go by. It's like, son of a gun, we hit the top line. So it is important, and particularly also in terms of the time, right? Are we angled like this along the level of resistance? Are we angled like this on the level of resistance? We barely care about a recoup as we go sideways and drift along through a range that's contained with expanding volatility if we're over here on the right. Time is not necessarily our friend as we were to calculate the returns based on this equation. Here on the right, we need this to be wider. Yeah, we need this to be wider. We need this top level to be a bit flatter, still descending though, right? So I don't mind, you guys don't mind if this is A steep angle here, that's fine. In terms of the top line, we don't like it flat. We'll still take it flat. Your chances go down. Okay, if you're sitting there with a good hand at a blackjack table, if this is flat, I'm telling you, it's not as good. Like literally, like you may want to just go to the next hand. We're sitting here all night, guy. Come on, girl. We're sitting here all night. Just let it pass. Compared to this, okay, now we got something to work with. Literally on a scale of money, on a scale of profitability in your profit equation, it's close. You'll still take a look at okay, well, let's take a look at the hand. What's the best area here to get involved? If something has a flat top resistance, we'd like to get involved somewhere down in here, below the level of support, technically speaking. Okay, so it just gets more complicated. All right, and let's take a look. So Bitcoin doing well, 2% to the upside. We'll go through a few different, and I just wanted to stream today, guys. I got up super early, hit the gym, feeling good, and said, hey, why don't we go VIP? What do we got? XERP for life. Hey, XERP, that's good. What's going on? That's all right. So this is an expansion of volatility expansion. So as we look at this, and let's talk about some practical matters as we were to look at, well, what's the question? How do we input more of our capital? Big caveat, big exception there. Still within guidelines. And guidelines are not my guidelines. If you want to last in this business, okay? And guys, the business is this. You're gonna make the choice as just say pro level. You guys go find the pros, compare yourself to them if you don't think you're pro. If you trade at a pro level and you meet a pro trader, you're gonna speak the same language, hopefully better than they do, period, all right? So the choice is going to be yours when you're operating at a near or at or above pro level trader is the following. As we look at this, and I appreciate the comment, that's nice. Go ahead and tell us whatever you want. Don't look it up. I'm not even going to delete the comment. Don't look up whatever they're going to do. Fits great within the conversation. Because when you're operating at a pro level, near pro, at pro, or above pro level, and I'll say above pro level because you're trading what you want to trade. Pros at the desk, go to any floor, any shop, any trade desk. Does the guy really want to be trading that? Is that his first choice? My argument is that you use the same tools, same skill set, same approach, same technology, everything. If you want to be trading it, he maybe have an advantage on you depending on which desk he's at and what he's controlling and whether or not he's trading with, against you, or how that's set up. But what I'll say is the following. That would put you above, in my mind, okay, in terms of your performance ability with a pro trader, like how you're going to just beat a pro. You're going to enjoy what you're trading. You get to pick what you're trading. A lot of those guys will say, oh, yeah, I'm at this desk. Oh, yeah, I'm trading this and that. But is that their first choice? A lot of guys have the same first choice, so oftentimes not. In terms of the issue that we're going to get into right now is, as you were to look at, we're in crypto. It's like, well, a lot of things go 100 times your money. A lot of things go 50 times your money. And I think about this all the time when people talk about, well, they got into Bitcoin early. How much money were they really going to put into Bitcoin? I hear a lot of stories about people. I've met a lot of people, a few people who put in some money, $5 to $10. Bitcoin was $5 to $10. They cash on it. Very few people threw a lot of money into Bitcoin, okay, when it was worthless, near worthless. Very few people, like, what kind of trader or investor would you be? Maybe some people saw the divine light from crypto heaven and just knew it was going to be. I tell you, if the people who saw that divine light early on have probably seen the divine light in maybe hundreds or thousands of investments. Don't ask them, right? So very few people got involved at heavier levels in Bitcoin early on because it was just nearly worthless. It went down to being nearly very close to worthless multiple times, right? As it started from its incipiency. And it's a great story. We love the story. No knock on, not knocking it all on Bitcoin. We trade it every day. What I'll say though, as you look at the market and your opportunity to participate in the market, as we're just looking at a pattern play out that we trade all the time. It's an expanding volatility pattern, level of support, level of resistance, level of support expanding with that level of resistance. Ideally, we would have liked just to comment on the technicals very quickly. Okay, we would have liked to have gotten back up into this zone earlier, right? With maybe another drop, and then bam, we've got a nice bull flag. That would have been ideal. We have a bit of some white space in the equation now, were we to want to do that. You guys know. So ideally, we have an aggressive move to resistance, support, just back and forth, okay? And we're couched in a level of support intake here, this specific kind of crutch that we're leaning on. We like a nice hit, bam, to resistance support without this white space, okay? As you're looking at a bull flag, whatever you're looking to define, we like that aggressive price action, resistance, support, just bam, 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 up and out. No wait, all right? No waiting game. And so I bring up the just below, say, Pro Trader, at Pro Trader, or above a Pro Trader level. What is the defining factor for you and for VIP, our group? As you settle in, as we settle in, you don't have to go chase all these guys. You don't have to go chase all the small coins. We spend some time. We called out ADA. We called out Sheeb. We called out what was it? ADA, Sheeb, and Doge. Just because they were low, looking at the entirety of the chart, I'm like, these are low. You're supposed to buy low. These are low. Recently, they all went between 20, 30, 40+%. They all went well. In addition, we traded Solana. But as you distinguish, and it's a good talk for us today to distinguish what your participation in the market is from when you begin, right? From when you begin in the market, you're looking to add that zero or that extra zero, 2 zeros to your position of $1,000. A lot of kids get in the market like they got $1,000. Hey, now they got to make 10,000, right? That kid's got to work probably a lot of time. Think about it. He's got to work a long time to make 10 grand. He's just got 1,000. So I understand the mentality, but as you groom yourself in the markets, mentally speaking, and what all you're looking at, you can do very well if you hone in on it and master, let's say, your what's your profile. I talk about that a lot. What does your profile look at the market? That's literally just what you trade. It's what you spend time on. Is it Bitcoin? You're going to find the patterns that trade well. We do, right? As you were to look at crypto as a whole, that mindset of I want to get in as quick as possible and double and triple or quadruple or 10 times or 100 times my account or how much money I have. Well, you don't have to do that, you know, and that's just a little bit of reinforcement as you were to look at things that are currently low, get a little exposure here and there and some of your more fundamentally sound coins, no big deal. But you can make more money using more money. And this is back to like in Bitcoin, how many people actually just put a ton of money into Bitcoin early? It just wasn't a solid investment. You guys know that early on. Of course, now it looks great. And I know some guys that invested like $5, $7, $400, $800 in terms of the price of Bitcoin, $5, so and they knew that then too. It's a bad investment then. And they reinvested in it again once they were attracted to the volatility of it, which is nice. So to hold it was difficult. That's one of the tricks. But I just want to encourage you as you look at the market overall, what distinguishes our group from all the other groups, guys, in terms of what you're really keyed in on. Focus on the big dogs. Focus on the Teslas that we trade. Focus on your primary, your primary considerations, your assets in terms of Doge, liquidity, Sol, liquidity. ETH, liquidity. These are high ticket items, relatively speaking. And I just want to encourage you that you don't have to go dig into there's Scotland. What's up? Glad to catch the stream. Cheers. Hey, Scotland. Nice to see you. Nice to see you. Liam in the house. What's up, brother? Nice to see you, brother. So as we would look at this, don't chase the pump and dumps. Don't chase the remote, illiquid, off the map, the 2 hours a day you're going to spend just, hammering through different things and you're going to find the next running coin. Don't do it, guys. Get good at this. Get good at what's on your screen. Get good at using larger amounts of money. And if you're good at trading, guys, if you're good at business, you've got a mind for the market, you have to have done well in something. I'm sure you've done very well. A lot of you have done extremely well in something else. So let this be the big ticket trade that you're going to get into. And that's just kind of a side feature there. We had a recommendation that someone go look at EXRP, easy XRP. That's fine. I want to encourage you again. What is it? if you can book 4 positive trades, if you find yourself continually booking 4 positive trades, what? Increase your trade amount, right? That makes sense. It's a gradual stair step into making more money in the markets. And you guys know you're trading enough. You know what that feels like. Yeah, I can book 4 trades in a row. That's awesome. You're doing well. Nice, by the way, nice, what was that? Speed resistance fan. You guys know that in the back. Hey, not bad. Looking at a speed resistance fan. We'll go on the daily, okay? On that daily speed resistance fan. How do you apply this? What does it mean? And again, the discussion started off, and I don't want to lose the discussion, right? We have a 72%. We're certain within 72%. You guys can just get used to me saying that if I can remember to keep saying it. But I mean, the certainty is on any expanding volatility like this expanding operation between bulls on support, bears on resistance, bulls on support, bears on resistance. This is getting larger. There's more volatility. It starts very constricted. This is a lead in. More volatility, boom, and the bulls pick up, right? Back to level of resistance. This is a signature, okay, of the fact that we're going to hit this level of resistance, okay? These also do love to bust. They love to bust, guys, up and over this level of resistance. Why? Because they're taking money from breakout traders. Somebody has some line of resistance just lined up here, and they have just geared themselves to, instead of operating along a level of support, right, which we love, we're parked down here and below, but park it on the level of support, enter here, right? Those catchy breakout trades can ruin your day, your week, your month if you keep doing it. Get it lower as best you can. Get it lower. It will change the way that you trade. If you find yourself hitting into a breakout, guys, get it before the breakout. Make sure you get it before the breakout. Get mad at yourself if you're trading something on breakout, and get mad enough to where you promise yourself and you actually do catch the next one before the breakout. Say it out loud. Do something tangible with the experience so you know, and not just like a guilty pleasure. I really shouldn't be doing this. Be like, you know, London, do not trade breakouts. Bam. And, you know, if you have to enter, you can enter. I just don't, you guys know, it is taboo around here. So as we talk about the equation, the certainty, within 72% to get to that top line resistance. And we'll focus on this. I don't care if everybody leaves the room who is not VIP or turns it off quickly. Good, that's fine. This is our niche. This is what we do. You guys know that. Back to speed resistance fan very quickly just to cover what brought last night. It was nice to see that pickup, right? And I looked for, it's not all easy, guys. I looked for, how long was that? A long time. Through 15 screens. 15 screens, long time. Like, we have to be on something. Right aside from the weekly, I'm like, the weekly's got to match up with something, the weekly 20 moving average. We focus on the 20 moving average, by the way, because it's New York Institute of Finance. Bollinger uses it, yes. So do futures traders. You guys got that, right? The 5 and the 20. Absolutely. So as we, it's just a basic, very basic moving average to take advantage of. So as we were to look at the daily, and have we already come into contact with the top band, standard deviation, nearly, but that's a nice green candle, off of that level of support, essentially that speed resistance span. If you guys don't know what these are, you already know what they are. In the back, you know what a speed resistance span is, cut at 1/3, boom. If you don't know what they are yet and you're in VIP, you'll get there. I put some settings in the back for Slack for you to get involved in that. I'll flash them on the screen if you want to take a picture of a screenshot of this or something. But speed resistance fan is what you're going to be using. And it's going to be 0.33 and 0.66, okay? And you're going to, what are you going to do? Top labels, bottom labels. I put the grid on. Just for that, I put the grid on just so that you know and I don't reverse. So that's just it. The grid will give you this red line here, red line here. Those are 1/3 markers, but more importantly, in terms of like a Fibonacci, it'll give you the 33%, the 66% in terms of the grid markers, retracements, but it'll give you these speed resistance fans. And we expect some interaction with these lines. Bottom line, guys. If we do not get the interaction, I'll say the second part of the equation is if we fail this secondary line, we would have an anticipation of going back to source, okay, back to the initiation. We draw these from low to high. So these are the critical areas of interaction typically, and they can be couched by the standard Fibonacci speed resistance fans with the full spread of all the Fibonacci levels. We like to use the 33 and the 66 in terms of that 1/3 demarcation. And nice move, huh? Nice to get it right. Yeah, what's up? 2.33% to the upside. Good job, guys. Good job. I always say, for everyone who's responsible for this, thank you and we appreciate the hard work. I say that every time, okay? When we get something right, nearly every time. You guys have heard me say it a few times. I know, it's funny to say it, huh? Congratulations to everyone who's responsible for this, and we appreciate it very much. That's just it. I'm not talking to myself. I just think that maybe, I don't know, maybe the market's a little bit more intelligent. They talk about market intelligence. Maybe it's a little smarter than we think it is. I don't know, you know, maybe, guys, who knows? So anyway, congratulations to anyone behind the scenes, anywhere, at any desk that was responsible for actually saying, that's a speed resistance fan. Hey, cool, let's do that. You had to play a little aggressive before we get into the equation of the equation on the 20 moving average. If you look at USDT versus USD on the, where are we at? On the 20 moving average, you kind of had to not want to hit it. That's just it. If you were looking at it, and I brought it up once, then I brought it up twice, you kind of had to not want to hit it. You're up 4.27% from that weekly. Now, we had, and it fits well within the conversation, we had the monthly below us. We still have the monthly below us. Slight differentiation if you want to mark it, okay? Let's just mark this right here as the weekly, okay? These are major inflection points in the market. Let's look at the weekly, let's look at the monthly, okay? The weekly tagged out at 28,669. 28,669. The monthly tagged out lower because the month passed and we set lower. We don't like this angled down, right? So that's a full spread here. In terms of backup cash, if it required you to have backup cash for 3.45% move, no problem. No problem at all. We're always willing to work with technicals that remind us that it's not an all-in game. It's just not. And the guys who forget that are the guys that go home and they don't like really trading that much either. Anyway, I'll just say that. You guys know that because they're willing to give it up. So, okay. We started off with when traders originally start, and you guys started probably like this. It's what attracts you. Even some of Buffett's material, et cetera, we'll talk about, like, you know, a stock that goes, that went 10 times, right? And we're going to be looking incidentally at this feature here, just as we were to look at some mid-level function as such, right? We're going to accompany this specific bottoming formation with the mid-level peak, bam, and we'll have associated up targets with the amplitude hereof. We will be cognizant on any time frame of the higher, okay, the higher, let me just clear this off, but of the higher indicated candle wicks as opposed to the lines. Capiche? You got it, okay? So any double bottom formation, what's the critical level? This specific mid-level peak, okay? It's an accompanying pattern, but it is one that's actively in play if you're looking at your targets to the upside. Fibonacci trend-based extensions, click low, click high, drag to the point of breakout. Click low, click high, drag to the point of breakout. Now you have your specific expectations to the upside, right? And we look for that max probability, max fractional probability of a 50% completion is the highest level of probability that you will find nearly across the board on every pattern that no one likes to talk about. We don't know why, but everyone's looking for the 100% completion, and they're losing all their money as they don't take profits at the 50% or even consider it. If it parlays into a larger pattern to the upside, we had multiple patterns this morning that we looked at. She with a nice throwback to prior flat top resistance, by the way. That was nice. As you were to look at the fractional completions, 50% max probability, right? In this context, we're going to have some hurdles. As we were to look at the 1 hourly chart, we have the line, which is the start, let's say the initiation of the equation. Then we have the candle wick, secondary portion of the equation. And right now you're in a position, I always say it's not about, and we'll regress, we will readdress the initiation of this conversation. I tell you all the time, I tell our group all the time, it is not a question of whether or not you can make money in the market. How many of you know that? All of you. I think you absolutely actually know that as well in terms of capital exposure. It's not a question of whether or not you can make money in the market. It's only a question of how much. Yes. And what do I intend to communicate with that? I intend to communicate the following. I intend to communicate the fact that you can make some money in the market, positioning your capital appropriately and not being overexposed or with too much risk. Okay? With no risk, you won't lose any money, right? But you can place your capital appropriately to where you will make some money. The question is going to be how much. And that's the part of the equation that gets people in trouble in terms of incurring losses. The people that do the best in the market, they earn their stripes, okay? It's not natural to sit there. I'm going to tell you guys, in terms of what's natural in the market, it's not natural to sit there and get a position when the whole world is caving down, okay? It's not natural in the market to sit there. I'll just tell you in terms of the psyche that's involved, to sit and let something go up 400 or 500% and wash out 60% and go up 400 or 500% thereafter. That's just not natural, guys. It requires a different level of fortitude and mindset. You have to see that program. It's kind of like you got to watch that movie and be like, oh, I know what's going to happen here. You explain to someone, this is going to be good. Make sure you watch this, okay? It's nearly like that, right? If you have been a part of some larger trades with capital, okay? We work a lot in terms of, guys, in terms of the group. I want to get you to the point where you got a 10x trade, get you to the point where you got a 20x return, meaning 20 times your money. Then you guys know what's the trick. Then you got to do it with some money. Yeah, you got to do it with some money, right? The big-handed guys, the big-handed girls, that's the difference. It's, can you get the 20x return with the money? Can you get the 20 times your money with some cash? And you got to earn your stripes to do that. It's just not, everybody knows that. Everybody knows that is the challenge. Past 100 rounds, you can all get 10 times a return, right? You can all structure something in and get 10 times your money on a return. It's how much, there you go again, huh? It's how much. We can get through 100 rounds. You can get through to not a question of whether or not you can make money. It's how much. And now that how much is how much you can put into the trade and still suffer through that. And if you're suffering through that, as we talk about it, I initiated this conversation. I tend to do this as we go back, and I'll remember things that I've kind of thought about along the way. The last couple of days, just to kind of share with you guys. And it's a good time to talk with you all. A pleasure to trade with you guys in the back. You're good people, yeah? VIP all the way, what's up? And looking at, Luke wants to make a VIP coin. He's chairman of the VIP coin committee. Luke, what's up? Hope you're doing well. I know you work so hard, brother. Looking forward to maybe you trading full time. It's gonna be awesome. Just can't wait. As we look, yeah, the idea is great. We've chatted about it back and forth across time in terms of, yeah, VIP coin. Who knows? We'll do something. If Ginza will get off everybody's back, we'll do one. Deal? Deal. All right. Now, he might have to. Who knows? So as we look at, and I'll talk about the equation in terms of how much, right? And this is a great conversation to have today. And it's not a quick, easy answer. Give it to you in 2 seconds. That's it. And just, okay, watch that part and delete it. Now, I wind up doing this with you guys. I spend a little time as a group and make sure that we're just core solid in terms of what we got going on here, right? Because I value this a lot. It's why it's why we have this business, right? And that's just it. We're building, we're trading, we're working very hard, and it's not something that's blown up in terms of we've got commercials on Bloomberg, and we want 500 traders. Like we don't want to get lost in the weeds, all yet. Still building some awesome indicators, some different things that are challenging even the best guys in the business. I'll just tell you, some of the best guys in the business are extremely challenged, imagine that, by what we're trying to design in the background. You guys know that. They're not happy all the time. I'm like, yes, you can do this. They're like, no, you don't understand the mathematics involved. They say to me, and I'm like, oh, really? I don't understand the mathematics involved. Like, you're talking to the wrong, that horse has been to the rodeo, the math rodeo a lot. Yeah, so, but they're not all, you may wonder, it's like, what's up with the indicators? It's like, well, we are, a bit complicated. Some of this stuff's very complicated, and it's difficult to work around some issues so that in terms of an update, It's difficult to work around issues with some of the best guys in the business that are used to being right about everything. And I'm like, no, like, you want me to show you how to do it? And it causes some friction, okay? So that's the truth. And I don't mean it to, I don't intend it to ever in terms of that. And I try and deal with kid gloves, but it's like if there's a trigger to push on someone who's near the top of the business in terms of indicators and mathematics and everything else, is for them to tell you can't do something, and then you say, actually, you can. And then for you to dig in with the mathematics that are required or involved, or the overall scope of the equation, and be like, no, you need to do this over here. And it's like you're not looking at this properly. It's so development issues. But you guys know we have a lot in play in terms of development issues, and it's no sweat off anybody's back, guys. It's no big deal in terms of any of those relationships. If they weren't difficult sometimes, you probably wouldn't be working too hard, right? That's part of working hard. So we'll have more incoming in terms of additional indicators. Right now, Fire and Ice is nice. Yes, indeed. What did we hit? We hit the 4 hourly. Fire and Ice rocking, huh? We hit the 4 hourly, and we hit the pro lower. We're sitting on a golden short right now. And you guys know, just be careful anytime you're shorting, let's just say shorting along the breakout of a bell pattern formation. You certainly don't want to miss a big move to the upside. And where are you at? You're in the position where you've made money. Now you're asking yourself, well, how much? This is the question. You guys know. When I say it's not a question of whether or not if you will make money, it's just a question of how much. And that's what the best traders get to the point where they're really mastering that issue. And that'll bring up what I wanted to talk about today in addition to this issue. And before I completely annihilate the question here, okay, in terms of, like, I keep asking, it's like, well, the issue presented is, well, how do we take more advantage of the structuring of this volatility? We can add in, first of all, as a solution, right? Without just saying, well, I know we're oriented to the upside here, but so fine, I'm just going to put in a fifth of what I really want to put in. That's it. And I say it with kid gloves in terms of this, because I don't want you just to, okay, now I have an excuse to go heavy. But if you have an accompanying confirming element here in this level of expanding volatility, do we have any confirmation as to anything else operating within this let's say within this certainty of reaching the top level resistance? Boom, hitting to the upside. Do we have any confirmation? Do we have any other confirmation? Yes. What do we have? Well, okay, we know we're in an expansion. This is our pattern. This is what we do. We have one, the weekly 20 moving average. True? Fact. Okay, so we're on the hunt for additional confirming factors to consider as we look at, boom, nice hit. Orders waiting, right? Yes. So as we answer this question, without it just being an outright simple formulaic, because at some point it's like, okay, fine, I'll just program this. I'll just input my orders and forget about it, and wake me up with an alert. Once we get over this, I'll right click, I'll hit my alert, add alert, and bam, just wake me up when we hit that top line, and I'll just structure orders in. I'm going to go to the beach. I'll see you guys later. All right, that's it. You'd like to have some more participation in terms of your involvement with the trade to say, no, this is worth, I'm going to put 3 times the normal amount on this because I've got my weekly. Yes, and I may step it up a little bit more, or at least at that 3 times what my and not gut, but what my confirmation is telling me. What are my technicals telling me? My technicals are telling me that we have a 20 moving average on the weekly. So as we diagnose this issue and this problem of, well, how much money am I going to make? Yes, we have this expanding pattern. Yes, within a level of certainty, up to 72% certain that we're going to hit that top line resistance. What do we have? Well, that's fine, but I've got to be prepared down here. Thank God. You may be able to get some lower pricing and still have that 72% certainty of breaching that top line resistance. So we look for confirmation. We look for a reason for ourselves to have a heavier level of exposure at all. Call it grade 1, 2, and 3, right? Do we have a, or A, B, C, however you want to rate it, a tier 1, tier 2, or tier 3? Is it a light, medium, or is it a heavy tier trade? Let's do a light, medium, or heavy tier trade. As you look at that, that's very well done. Light is, well, we're in this, and we don't have any accompanying confirmation anywhere, right? Or maybe our accompanying confirmation is literally just fire and ice on lower time frames or our specific retracements from this micro level here. And we're at the 38.2. Is that a heavy level of confirmation? No, it's not. Is it heavier to get into this level of confirmation on the entirety of the range? Yes. Okay, but that's heavier on the your fire and ice will get you there. Higher time frame on fire and ice, you'll hit those. Okay. Not that you don't need them. Look for the confluence again, but as we look at a light, medium, or heavy tier trade, okay, the distinguishing factor and the important variable as you're going to assess this is do you have any heavyweight confirmations? What do you call them? Heavyweight confirmations. Okay? We have 20 moving average on what? On the weekly. Okay? Heavyweight confirmation, large time frame, highly respected moving average? Yes. Okay. So we have one heavyweight confirmation. Would we say that this is a heavyweight confirmation? No. This specific speed resistance fan, heavyweight confirmation? No. Why? It is an intermediate range, let's say an intermediate range application of a very standard and well respected, so it has a level of respect to it for some level of a hit, but it's not a macro consideration. We want our heavyweight considerables, guys, to be heavyweight factors to be. This is it, guys. This is literally, if you're gonna get away from, okay, fine, I don't wanna make take me out of the ball game for baby XRP. I don't want to do it. I don't want to find the next baby XRP. Just take me out of the ball game, right? If you're not hunting, you want to make real cash in the markets. You want to be able to assess it properly. I don't hear people talking about this. I'll hear risk-reward ratio, like, give me some more. Give me some confirmation. Give me some heavier weight confirmation. This intermediate level here is not going to be as heavyweight, bam, as your macro, the entirety of this range interval here, okay? This is the entire range of Bitcoin here on the daily. Shout out to everybody in Scotland. Shout out to everybody in Australia. Hope you're doing well down there, my friends. Absolutely, VIP in the house. And as we look at that, the heavyweight consideration here was weekly. And start off, what kind of fight we showing up to? A heavyweight fight or otherwise. And what kind of ball game we got going on here? We got. This is the one we can win this, right? We're showing up for a reason. We want to be champ in the market. We're going to focus on the right patterns. We're going to focus on the right dynamics. It's a pricing dynamic pattern, yes. But what is this? Expanding volatility. Why would we want to trade decreasing volatility? Just as you think about it, we want to be a part of expanding volatility. Like Bitcoin is highly volatile. We want to be a part of the expanding volatility. Everything is contracting. Put us on the other side of the equation where when things really start ricocheting back and forth, we're going to take advantage of it and bam, that's where we're going to hit it. Yeah. So that's the right kind of talk, right? Yeah. So, and as Bitcoin's going to be quiet enough until, if she puts you to sleep for a while, just watch her wake everybody up. And you guys know, just watch her wake everybody up. AI's been nice this year, been nice to be a part of and nice to trade a bit. So we'll look here at some of those, that Magnificent Seven that is on. I'm just keeping an eye on Tesla. She's pretty quiet. NASDAQ down 1.1, NVIDIA down. Take a look at these screens. Solana doing pretty well. Huh? Solana had a nice hit. She with a great hit down at prior resistance to support. We have some lower levels. Again, we'll think of this. Do you have any heavyweight factors? Any primary confirmations on a macro level? Do you have any heavyweight factors if you're going to gauge your trade as light, medium, or heavy in terms of your margin? Do you have any heavy confirmations in terms of it being that your margin should be heavier? that you should go heavier into the equation or not, okay? And just go through this process. If it didn't, and guys, it's a good move. We caught the move. If the only thing that we're talking about now is, well, I guess I should have put more in. It's exactly a good time to have this talk if you just didn't, right? Absolutely. So we have the contest that we'd like to show up in for, right? Which is this expanding volatility. We trade them all the time. We've been through a little bit in terms of the mentality, okay, of just trading today. And the last thing that I'll get into just because I wanted to stream today. It was another good thought that I had, and this is cool. This is for VIP. This is you guys, okay? You should, we can, we are, and you guys, you will, at some point be able to enjoy your profits. At some point be able to enjoy trading, enjoy your profits, right? This is something that just kind of hit me, and I'm thinking about it. It's like, well, it's the market. It's not like a secret, coded something that no one can figure out. It's not something that only certain people are supposed to do well at, and other people never will. And I thought about it, and I think a buddy of mine from the gym, he just got back from a month in Salamanca or Marbella in Spain and in London and all over the place. And he must have really enjoyed his vacation. And I'm thinking about what we do, and when I think about the market, you should be able to enjoy your trades. You should also be able to enjoy your profits. There's way too much money to be made in the market, and we wouldn't be doing a good job if we weren't focused on ways to enjoy your trades, enjoy your interaction with the market, and enjoy your profits. It doesn't have to be excessive, We don't need a Lamborghini yacht and a Lamborghini jet. Either or would be okay, but I don't think they make the jet, right? But, and maybe, I don't know, you guys, you drive Lamborghinis. You have. I'm sure most of you, if not all of you, have driven them. They're just loud. Yeah, you're that guy. Yeah, you're going to be that guy all over town. Huh? I was like, wow, that's a way to drive that car, champ. Most of the time, when you're screaming through, you can go there or you can not go there. We like Lambos are great. Ferraris are nice. Maseratis are very classy cars. You can pull up to any building you want to in a Maserati. Anyone. The new MC version, they kind of ruined that, but that's a true track car. But that's the one thing about a Maserati. You can pull up to anyone's house or any building in a Maserati, and it's not it's not the a little bit of the eyes off on that. But as I talk about it, I want to reinforce, you should be able to, you should be able to enjoy your interaction with the market. You should be able to enjoy your profits from the market. And to the extent that either one of those issues isn't going on right now, it's like I'm not enjoying the market right now, what needs to change? Okay, let's change it. Let's fix it, right? In terms of, well, I'm not putting enough money in on these. Well, okay. I'm not making enough money. It's like I would be enjoying it if I made more money. Good challenge. We talked about right now an equation, an approach to the equation today that could make a difference on the next highly probable pattern that we have. Okay, and I call it is within certainty. You're certain within 72% of certainty. And I say that again because I don't want it to be just another tagline, probability is. Forget a probability. A 51%, I don't care about a 51%. I'm not going to put 50 cents into it. Literally, I won't put a quarter into it. I don't want 50%. All right? I want a 72%, big time. It's such a big difference between 72, let's say 72 to 80, 85%. There's such a big difference between that and a 50% or a 60%. It's like, no, you're getting towards certainty. It operates more in line with I'm just going to call it a percentage. I'm just going to start saying it's certain within 72% that you're going to go to the top. I'm not misspeaking. I want to distinguish this pattern, okay? So that's where we're at. I am not the point and shoot kind of guy all the time. Sometimes I'll do it, but you guys know that. I'll bring up specific things. I will tell you typically that this is, let's say, and it's going to haunt everybody who didn't want to trade it but Tesla, and that's fine. You guys know it's no big deal. But if I do throw a tagline on, like, well, we get these once a year, once every 2 years, however it is, you know, I still want you to make the decisions in the market. I still want you to trade what you want to trade in the market. I have never liked, and you guys know this, but I like you to interact with the market and to be able to re-interact with me about what you're doing in the markets. That's what makes this work. That's what makes it really cool, right? And the more interaction I get with you guys in the back, it's very much appreciated. Venus, thank you for sending me the chart today. Very nice. I appreciate that. On Apple. Hey, let's look at Apple. Let's look at Apple right now. So you have a solution now in terms of lightweight, medium weight, heavyweight entry. Boom. More of a heavyweight, a heavier entry. It's going to be determined by what? Okay. Now we got the weekly 20 moving average. That was a heavyweight confirmation. Within the framework, as you're dialed down into lower time frames, adjust accordingly. Adjust accordingly. Okay. You guys know that. And your level of experience is going to dictate your comfort level and your returns therewith, right? Without a doubt. Let's look at, we can go through all these. The one thing on, ouch, huh? Look at that. The one thing that I would say on anything that has broken like Apple, and what did it do with a earnings, projection forecast, market status, phone? Seems like we've been saying this though. Like phone, I'm gonna give you a tactic here, okay? But it seems like there's just enough enough on the radar that at any point in time, it's like if some insider needs to sell or anything else needs to happen, it's just a different level of a press release that has a different reaction for reasons X, Y, or Z, right? So, and that's not, it's just everything seems really couched, okay? Now, the one thing that's not couched, let's look at a regression trend. Okay, a lot of you may be having difficulty defining, okay, a specific trend line. Some of these trends that just keep going, right? Like Apple has just kept going. I brought this to you guys a while back. Slow mover, admitted, granted, slow mover. Most attractive bull flag we found all year? No. One of a dozen that we have found? Yes. Up to you to trade it? Yes. Great trade? Absolutely. Will it handle heavy liquidity? Sure. As we were to look at this, guys, the regression, if you will go down on the lines portion of your trading view, if you're having difficulty scoping out where is the level of resistance, where's the level of support, okay, go down and hit on the primary first line here, go to regression trend, and you can define a regression trend anywhere, okay? Click and click. It will give you, essentially within a means of standard deviation, it's going to give you a nice channel framework, okay? You can do it on larger time frames, lower time frames, just a quick, easy fix. And you do need to be careful because if you draw the specific regression trend to the wrong pivot points or the let's say an incorrect or an extraneous level or peripheral, let's say a peripheral level of consideration, you'll wind up with let's just say a much different channel framework as that standard deviation is recalculated, okay? But that regression analysis should work on anything that you have a question on as to whether or not you're still within the capacity of maintaining trend, okay? One other thing that we've thought about and that I want to just reinforce is the knife. Where's the knife? The falling knife. Don't catch the falling knife. Where's the knife? Okay? As you look at a spill out, where's the knife? The knife's on the left-hand side of your moving averages. Okay? Just period of your moving averages. It's on the left-hand side. This is the knife. Okay? Now, as you were to look at primary pickups, let's talk about a primary exit on Apple. Okay? Let's talk about primary pickup on a short. Nice bull flag. Biggest bull flag Apple's had. Okay? Let's go with a Fibonacci trend extension. Let's go ground zero to high to low. Let me do this and get in with coordinates of 0. And there you go. from 0 to the high to the low, bam, right? Beautiful. That's money. You guys know the tactic, you know the technique, right? So give yourself the regression, easy does it, bam, as you're looking at any type of a framework here, stay off the left side of your moving average. If you have a key consideration, a heavyweight factor, like what I just put up on the board, if you have a heavyweight factor like your 38.2, bam, extension, yeah, okay, that's a heavyweight factor on the macro. So, yeah, as I would talk about like pickups, because a lot of these will spill out and you're like, well, you know, we like this move, we like this trade, we like this, guys, you're going to be at risk if you are on the left-hand side of the equation. And you will notice that if you will allow things to develop, okay, let's just say if you'll allow buyers and sellers to, while your fire and ice is killing it a lot of times in a range like this, let's say on a 5-minute time frame, we'll just look at it, it's like, well, there's no answer. No, there's all types of answers here. This is NVIDIA. All types of action and answers, digging into the hourly, for instance. You're just having a heyday here between the lower pro line and upper pro line. Very nice, right? Just bam, 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 bam. As buyers and sellers are ricocheted around and breakout traders are punished, I'll bring a few breakout trades in the back, but as those guys are punished, typically, I'll say that our fire and ice is killing it, right? And you guys know that, just killing it. So let the price action between buyers and sellers, let it develop. All right, let yourself to get into, as we talk about, our golden pattern, really, guys, are just the prime time patterns that we really like, that expanding volatility. Stay away from the gray zone, okay? Try and stay off the left-hand side of the moving average, particularly if you're on the 3-minute and you're still just killing it to the downside. I mean, you don't want to catch this, guys. You can, but that's the knife. That's a 3-minute. That's the knife. Boom, boom, boom. Okay? The knife is on the left-hand side of that, at least the 20 moving average. Oftentimes, your moving averages, it'll be on the left-hand side of your essentially your 3-minute moving average, your 1, okay, or your 5, or your 10, especially, but on the 1, it's to the left. That's extreme, right? So be cautious of that. The market is doing really well in terms of providing trade opportunities. Tesla is a lot of fun. You guys know, former hedge fund owner, private, non-SEC, not financial advice. You guys know that. As we were to look at Tesla, a little bit steep on this. I will tell you, as a matter of absolute fact, period, where would I personally like Tesla to go? Would you like to know? To $50. I would love it to go to $50. I don't know how it could happen. I don't know why it would happen. I doubt that it could achievably happen. But as I do return calculations, where would I like it to go? I want it to go to $50. If I could get on X or whatever, and Project X, and get out there and make it go to 50, I'm not going to do that. But honestly, if you look at your return calculations, it's great. It wants to scream up through the sky, okay? But I'm going to ask you, for the same guys that wanted to go up there now, how much do you own right here at our pattern we brought on Tesla? We'll go through a few cryptos here, okay? But this was a newsmaker. This was nice, guys. How much do you own here? If you don't own much there at all and you missed it and you still want it to go up, what are you trading? What do you got? Huh? You got a catchy pattern across the top? Okay. So you want to trade a catchy pattern across the top heavily, huh? Okay. You'd prefer not to go back down and have another heavyweight pattern? And you don't have a position now here. You don't have a heavyweight position now to even lock in profits on up here, but you want to go up to 400 now without the appropriate level of exposure from here. Why? You wouldn't want to. You want your heavier level of exposure lower. You want to lock in your profits at a level of resistance. Yeah, when it gets catchy, lock in profits. Good gosh, did I ever bring that to the attention of VIP? I had to, right? Just because I had to. You guys get it. So, considerations to look at. We're at the 23.6. I love the 38.2. I love the 50%, the 225, the 200. I'm not just saying that because, well, I just really like it. It makes me sound tough. I'd love to get down there. If you do the return calculations on anything, my good gosh, you want to do Dogecoin? You want to do Doge? Elon's involved, right? Can he get it back up to 900% return? That's the 10 times your money everybody wanted. You kick off your right boot of coin change in the pocket or whatever else you have, and just buy some Doge. Just your right, left boot, boom. Just some, the water bottle's full of the change. You go to some people's house, you're like, wow, that's a lot of change in that water bottle. That's interesting. So you come home every day and you just put the change into that water bottle, huh? Have you guys seen those? I don't even know where I've seen those. It's weird. I'm like, oh, cool. That's good, huh? So anyway, fine, you want 9-10 times your money? Just buy Dogecoin. See, and if it fails, just blame it on Elon, not on me or anybody else. Arguably worthless, sure. Make a lot of money, high volatility, sure. Can it still go down 50%? Do you really want to know the answer to that question, huh? If you could get down 35%, it'd be nice. You're low. You've been low. I brought it to you guys low here recently. A nice play on it. I think Sheeb outperformed. Do you know how to deal with this in terms of a potential return on the 800% that you could make? If you go down 35% more instead of 800%, you're looking at 1,000 at 13 times your money. Let me do this exactly. You're looking at, what is that? What is that? I'll try and get as close as I can. That's it. Almost 15 times your money. If you can drop another 35% to get back up there. So incrementally, you're rewarded, guys. You're rewarded incrementally with your drop here now to get back up to recovery. Do you have an expectation of recovery to all-time high? Technically, do you have anything technically that's telling you that you're going to recover to the former all-time high? Huh? Other than a preceding level of resistance, established level of resistance. We can get into some different dynamics. This expectation, you're going to go buy Dogecoin if we get into this discussion. I don't want you to buy Dogecoin. I'm going to go back to this discussion. What's the goal here? To trade this well and with significant margin. After doing what? Becoming consistent on Bitcoin, okay? On a primary asset of your choice. To trade it well enough to make good money as you trade, right? We'll scope this out now. Nice pickup yesterday on BTC. Doge is always on the radar, but I know people who have millions of dollars in Dogecoin at 35 cents, guys. And they hate it, and they turn their back on crypto, and they still go through this psychological melee and toil, guys, big heavyweight guys, business guys, and it's not worth it to sit there and watch them do it, and watch them go through that and suffer because of Dogecoin. Like, structure it in, treat it appropriately, don't go there in anything you trade. Enjoy your interaction with the market. And enjoy your profits, right? That's going to be the key. We'll go over some different tactics in terms of, I just brought you guys Doge low, so don't go buy it now. Last thing, don't go buy it now. I brought it to you low 2 weeks ago. It was low. Yep. So, you made some money on it. It was not an opinion, it was just low, right? So, as we look into that profit equation, what are we looking for? Some heavyweight considerations, okay? We're looking at some heavyweight considerations to fold into that question of how much you should be trading or how much you can trade in line with our max, what are they? The certainty, right? We're looking for that certainty within 72% certain. I'm going to start saying that on our bells. They rock. What's the most certain is we're getting back to that level of resistance across the top. You guys know that. That's the touch point we're really looking for. and that ability to run from wherever your entry is. And we had some nice coincident level of support there. So enjoy your interaction with the market, enjoy your profits. If you can't visualize yourself enjoying your profits, what is that going to look like for you? Okay, we're in through the summer now, right? We're going to be closing out 2023. If you are not enjoying your profits yet, what's it going to look like in 2024? I don't care if it's the hot car, the fun time, the trips around the world, whatever it is going to be, but how can you structure the market in and change whatever needs to be changed where you're enjoying your participation in the market, right? A lot of that's VIP for us guys, without a doubt. You guys know that. And as we would say that, and enjoy your profits. And I know you can do both. I know you can do both, enjoying and not suffering through your trading. Oh my gosh. Give me a break. Let the other guys suffer through it. Let them complain about trading and oh my gosh, it's just awful. Let them do it, guys. They don't know what they're doing. Let them complain about trading, either to themselves or otherwise. Let them complain. We're going to enjoy it. Yeah. And we're going to enjoy our profits. That's the idea. Life's too short, guys and gals. It's too short. You guys got that right. This is London with Bitcoin Spike and VIP Trader. Appreciate all of your time. Way to lock and load with that. Boom. Yep. Nailed it, huh? Good job. And congratulations to anyone who was responsible for making that happen, guys. And you were. So we'll talk to you guys soon. Just wanted to stream for a bit. If I can get up at 4 o'clock in the morning or 3:30, go work out early. We can stream a little bit more and maybe cover some more assets you guys want to cover. In the meantime, take care of yourselves. We'll talk to you soon. Take care. Bye-bye.